Woohoo! Right guys, I know I always say that there's no secret sauce in trading, but this video coming up is the next best thing. Here's market structure part 2. Right, so I assume you've all watched the market structure part 1 video. It's the first video I ever uploaded on this channel. Went down a storm, got loads of likes and comments, go and give it a few more if you like. Remember to subscribe, obviously. But yeah, that was the first one. Pretty basic, but gave you a good general rule for how to map your swing highs and swing lows. So, you know, great. Good feedback on that, people using it, having success. But, you know, there's occasions, and I had a few people crying, like, oh, it doesn't work. Here's the thing, that's just one part of how I view structure and how we view structure at the MagicFX Academy. And I'm gonna give you the second part today. And it's to do with, it's very simple as well. It's to do with the premium and discount tool that was talked about in the supply and demand video. So if you haven't watched that, go and watch that. Now the premium and discount tool is what we use to tell if structure has been mitigated. So if you get a bullish breaker structure to the upside, that leg, we put the premium and discount tool on that leg of price, and if price comes back down in the correction phase and mitigates the discount and then proceeds to break structure again, what we've got there is order flow in place. We've got the break and the mitigation to the discount and then a further break. If price does not get mitigated to the discount, what we will in future expect is that price will need to sweep the low that was formed that did not mitigate anything and come into that discount area, and we can expect a reaction from there. Now, that is the basic theory behind market structure, and what I call a structural break that comes after a mitigation to the premium or discount, I call that a major breaker structure. And if it doesn't mitigate the premium or discount, I call it a minor breaker structure. So what we're left with are major swing highs and lows and minor swing highs and lows. And this gives you areas of price that price will likely be drawn to, and you will be more likely to get reactions from. And minor swing highs and lows are also likely to become liquidity. I'm often asked, how do I use liquidity in my strategy, and can you do a video on liquidity? Basically, this is a way of establishing what highs and lows are more likely to become liquidity. It's because they didn't mitigate anything significant, so they're more likely to get swept. So this is kind of a coverall for that. So yeah, we'll get into the charts a little bit, show you some examples. If you do want to know more about this, obviously I go more in depth in my course content, but there's enough in this video, even what I've just said, that's enough for you to go and experiment with it, look at it, and you know, that's your structure part 2, basically. Right, so guys, going to go over a bit of price on the 15-minute, just to show you some examples of this in action. So if we look at this leg of price down here, what we can see is that we've had a valid breaker structure here. Then we technically cemented a low down here, and we could regard this, and we would before anyway, as valid swing structure according to our original mapping structure rules. But if we take our premium and discount tool, we can quite clearly see that after cementing this low, we did not get a mitigation of this premium area before price continued to the downside and broke structure again. So this would be a minor breaker structure, and this would be a minor swing high. So what I will do is use a dotted line to mark that on there. And then we'd expect this high to be taken as liquidity because price will want to mitigate something in this premium. So what happened was that price was swept, and price then, after sweeping this high, continued down to the downside. Now what we have here is a case of two separate ways of seeing price. So we had this original leg of price, but also we have the extended major leg from this major swing high to this low down here. And as you can see, after we had this extended leg, price did come up to the premium and then broke structure again, sweeping these minor highs. So we've re-established the order flow there, and we have this. Now, the other thing we have is the expectation, or sorry, we have this previous minor leg of price, and we can still expect some kind of reaction to this area when price gets to it, purely because it's an unmitigated premium zone. And we did indeed get a reaction. Now this is the 15-minute, and you can see we've got, you know, decent reactions to the extreme up here. And you could certainly get in some 1-minute shorts from there. But overall, price did re-establish the order flow at this point and ultimately major structure turned bullish. So we'd have to be aware of that as well. So looking at this, we had another break of structure here, and then price continued to turn bullish. So if we look at the way price moves after this, what we have are further breaks of structure, and then if we look at this, we have this swing low and this swing high, and that was mitigated to the discount. And sorry, I missed out that we had this original swing low and swing high, and that was mitigated to the discount before continuing on. So major structure is clean and available there, and here again we mitigated to the discount before breaking up. So again, that's a major structural break. And continuing on, we have a new swing low down here and a new swing high up here. And what you can see here is that price didn't quite mitigate the discount area before continuing up. So what we do have is a minor break of structure here. And yes, it's very close, but you know, this is kind of an exact thing, and there are specific zones in the discount that price came nowhere near to mitigating. So this is an unmitigated discount area, and we'll keep this in mind for later on. And what you can see is that price carried on up here once again. Still minor structure in place here because we didn't mitigate anything in this discount before continuing on. So again, we'll keep this area in mind for potential reactions in the future. And then eventually price came up to this high, cemented this high, and actually we broke above that high, and that did in fact mitigate the discount area before breaking that high. So order flow was re-established there, and then we had this major break of structure here, turning price bearish. So what we have once again here, we have these various areas down here that were never mitigated to the discount, which we can look at for areas to look for longs in. And this is a bit of a change in the way we view structure, because it's whereas before we'd only play supply and demand zones within the current leg or range that we were the current between the current swing low and swing high. Now we can still look for zones outside of those areas in these unmitigated discounts or premium regions. And let me just re-examine this, because I've actually seen that we did just about have a break above this point here. And as you can see, that would definitely be a minor breaker structure. So yeah, made a little mistake there. And as you can see, that minor low, of course, got swept, and price continued down to come and mitigate that discount before continuing up again. So if we just map out some substructure here, what we can see, and this isn't the most accurate mapping of structure that I'm doing here, but I'm just kind of showing you. And then we had this. Okay, so this kind of thing happens over and over again, leaving these unmitigated premiums and discount zones and then reacting to them. And then what you can see is we actually have both sides of the market. We have an unmitigated premium over here. Okay, so price broke down again, and we had a further minor break structure because we didn't mitigate this premium, and then once again price broke down, and overall, yeah, we had an extended major leg until price came up and decided to mitigate that previously left premium area. So we have an extended major leg here after price failed to mitigate, and then price ultimately swept those minor highs and came to mitigate what was originally left in this premium area before continuing down. And if we look at price closely again, what caused that mitigation? Well, what did we tap into? We tapped into this previously unmitigated discount area, which gave us a strong reaction and causing us to break these minor highs and sweep into this area. So there's always a reason on both sides of the market as to why price reacts from certain areas, and it has the fuel to do so, to get these mitigations. So, you know, we've now mitigated, was it this zone here, and we can consider this discount now mitigated, and as we've had a reaction from it, so we can get rid of that and get rid of that, and now this premium is mitigated, so we can get rid of that. Then if we look further down, we also had this unmitigated discount zone, and price has of course tapped into that, which has caused a reaction and ultimately turned price very bullish again from that area. So we'd still be looking at this unmitigated discount for price to continue from. Now, yeah, that's the basic idea of it. Of course, as I've said, go more in depth in this on all different time frames, looking at it in my course, and how we can look at trades based on this and get entries. It's the same on every time frame. But yeah, I hope that's helped you out some. It's a little bit more of a complex way of looking at structure, but it makes a lot of sense, and it's pretty powerful stuff that I've unleashed on you here. So enjoy that, and yeah, I'll see you next time, guys.